Hello and welcome. This is Large Trades. And this is, of course, you're watching the earnings edge on Large Trades, and we take you through all that is happening through the course of, the markets. At the moment, we are seeing, gains and strength. A lot of that is coming on account of the Bank Nifty advancing by well over 1.5% as we speak. The Nifty is up around 0.7%, but it is the gains in the Bank Nifty that we are seeing, a lot of movements potentially towards the upside. And a lot of that is also on account of HDFC Bank, ICICI Bank, and Axis Bank. Now, let's pull up the Nifty constituents if we can and take a look at where in fact there is that pull and push, and you'll know that a lot of that has to do with HDFC Bank. So about a quarter of today's green is on account of HDFC Bank. We also have Axis Bank and ICICI Bank advancing, and of course Reliance Industries, that's the other heavyweight which is also pushing the market upwards. And what's weighing on the indices today is L&T. And besides that, Titan, NTPC, and of course Tata Consumers, but not too much to speak for otherwise. On the whole, it's certainly a very good day of trade, and perhaps a good traction coming in too as we run up to the vote on account that happens tomorrow. But for now, that is how things are panning out. Of course, in terms of markets too, and broader markets, also moving largely in tandem, where we have seen about a 1.3% up move in the mid-cap 150 index and a near 2% up move on the small-cap index. So there's no letting up there, is there? And we have seen that, substantial up move largely on a lot of these counters, which are also moving on account of earnings. Of course, we will get you a lot more in terms of earnings action, and we also have plenty of managements lined up as well with respect to earnings going through. Well, the question really is that as we move into the final leg of the earnings, are we in fact expecting more impetus towards the positivity? And once we have the union budget also out of the way, can earnings lead these indices even higher? Do remember that Nifty is not very far off from its lifetime highs, and which it of course made recently. But we're going to have to wait and watch out on that one. To very quickly address what's happening with the broader markets, and there is one stock which we need to address, that's Adani Wilmar. We've had earnings from the company, and it does seem like on a sequential basis we have seen tremendous improvement. Of course, on a year-on-year basis there has been a dip in revenue, but we also have to understand that edible oils pricing there remains volatile on account of several other commodities as well. But to talk to us about the quarter gone by and what we can expect, we are joined by the management of the company, Anshu Malik, he's the MD and CEO of Adani Wilmar, and Shrikant Kanhare, he's the CFO. Good morning to both of you, gentlemen. Thanks for joining in. Anshu, I start with you. Your assessment of the quarter, sequentially, it's been a great quarter. We continue to see growth. Year on year, of course, I reckon a lot of that will have to do with pricing of edible oils. Can you take us through this traction as to how things have panned out for this particular quarter?
See, from the quarter point of view, one, we have turned around from the loss to profit. So we are back in our normal EBITDA and PAT. One. Two is that the food business continues to grow at around 18-19%, but the domestic market is growing at around 40% plus. It's the export of rice that has taken a little beating. Otherwise, the volumes would have been even more. Third is that PAT edible oil has been showing a good growth, and up to this December, 9 months, edible oil PAT is growing at around 16%, which is quite good. Market share has gone up from 19.5 to 19.8 in oil. In mustard oil, let me tell you, we have been growing at 20% CAGR for 2 years, and that is the biggest domestic oil. So their fortune remains the number one mustard oil brand in the country. Wheat flour has been growing and market share has grown to 5.2%. So all in all the products have been growing. So Q3 has been very good.
Well, Shrikant, the word on margins, we're looking at an improvement there as well. And I guess the question here is that how much of the improvement is on account of perhaps better realizations, and what is it that is in fact leading to improvement in margins?
Yeah, I think the improvement, of course, has been overall. I mean, if you look at our segment result, the edible oil has outperformed. I mean, we have been through a very bad phase in Q1 and Q2. It's a completely turnaround. Realizations, of course, have improved. So edible oil has delivered better number as compared to the last quarter. And year on year also, our margins are more or less now into the range of a run rate which we used to clock of 550 crore of EBITDA and anywhere between 200 to 250 crore of PAT. I think we are almost there. The good story is volume is growing. Sequentially, we have grown by 5%. Year on year, we have grown by 5%. Food basket consistently delivering a good year on year result. So I think, yes, we are back into the game. And I think as we move forward, quarter four should be even better than quarter three.
Right. Well, quarter four should be better than quarter three, and that leads me to my next question, because I am looking at the company's edible oil segment. And in terms of profitability, sequentially, of course, we are looking at a big profit that is in edible oils. We're looking at a 297 odd crores segment profit as against a loss of around 195 crores. And even year on year, there's been a 15% up move, a 15% improvement in profitability. Anshu, my question really is that what can we expect from the edible oil segment going forward? Can there be a little bit more expectation when it comes to volatility in perhaps realizations and also profitability going ahead? Or can we now say that the turnaround has happened? Cyclically, a lot of the challenges are behind us, and from here on, we can in fact look for positivity?
I think the pain are behind us. The volatility has reduced, which is very marginal, and we are used to such kind of small volatility in our business, and accordingly we have the risk management policy. That is one. Two, the consumption story continues, and if edible oil has been growing at 16% so far, that is fantastic, I would say, because it's a matured category. What is more heartening is that rice, sugar, wheat flour, pulses, besan, all these are growing at around 30% plus. Domestic business of rice has been 75% plus for us. So all in all, the food basket is growing. We might end at around 5,000 crore food basket. Retail penetration has increased. It's now at 2.1 million outlets, direct and indirect coverage. And that is very heartening to see that the oil is and the food basket is now available across the country. South has started doing well in food, and we always said that in South we will go with food and oil together, unlike our earlier experience. So overall, I feel we are in a better situation, and here onwards, the market also looks better. Price stability is there, and consumption story continues.
Fair enough. Shrikant, can you tell us about CapEx that has been earmarked for not just the upcoming quarter, but also for FY25? In what areas are we going to see incremental investments? I reckon that to a certain extent, considering food and FMCG segment is an up-and-coming segment for you all, what can we expect there as well?
Yeah, I think the biggest CapEx right now company is running is what we had envisaged in IPO. So there's a CapEx program of close to 2,200 crore, which company is right now running in with the various integrated complex that we are going to build across India. Though this CapEx program is very much on the timeline and should deliver the commissioning maybe by March 25. And most of this CapEx is actually spent on the food complexes, because I think as far as the edible oil is concerned, we have enough capacities in place, and therefore we don't need any expansion as far as edible oil is concerned. But all focus of company today remains on food. Besides this IPO capex, we are also considering a couple of more capexes in and around industry essential, basically with respect to oleochemical and the castor. I think those are still on the drawing board, and as we go forward, I think we should be able to lay some outlay on these two businesses also.
Okay. Anshu, if I can actually take up the FMCG and food segment ahead with you as well. In terms of plans that you have for FY25, can you tell us a little more as to what you have in store for distribution as well as perhaps introduction of new products here?
See, first is that amongst the capex, I will tell you that 3 plants of 240 tons each per day chana dal is coming up, which will add almost, 18,000 tons a month chana we will be processing. So we will get dal, and obviously we will also make besan out of it. 100 tons nugget will be ready in another 2-3 months time. That makes us one of the largest soya nugget player in the country. Soya nugget is a very good value added FMCG products, and it's a branded products, and it is doing very well. So there we have a big scope to grow. Specialty fats is another place where we are pushing and putting more capex, and with Wilmar's technology and technical know-how on lauric fats, we are going ahead and putting that business in much more focus. And let me tell you, in specialty fats, not only that we are the largest, but we are also the largest lauric oil or palm kernel oil and palm kernel mid-fracts. We are supplying to all the leading chocolate manufacturers in the country. And along with this, of course, the rice basket is there, both basmati and non-basmati. And then maida, we are going for institution supplies for specialty fat flours, which is protein-based flours and all that. So I think overall food basket, we are working in a manner where we can surely be understood and taken seriously as the largest food and staples business player in the country.
Sure. Well, gentlemen, we leave it at that. Thank you so much for joining us and taking us through the company's numbers as well as the outlook going forward. We wish you the best for the future. And on that note, it's time for a short break. But there's lots more lined up on the other side. Stay tuned to NDTV Profit. Welcome back. We now shift focus to large trades on our show, and right at the top of the list we have Transport Corporation of India, which is the stock of the day, and it is buzzing ahead on volumes. Let's get in my colleague Mihika to give us an update on this one. Mihika, what's going on with this?
Yes, the stock is up 20% intraday. It's also reached its life high of 1,008.15 rupees, and the volumes are over 40 times its 30-day average. There was a large trade where 0.13% or 1.02 lakh shares changed hand at a price of 970.35 rupees per share. In terms of valuations compared to its immediate 5 peers, the company has one of the lowest valuations at 24.58 P ratio, while the highest market cap in the space, which is Container Corp, trades almost 2 times the P ratio of Transport Corporation of India, and TVS Supply has the highest at 186.44. And we also have a brokerage note that came a few days back, which is by Motilal Oswal, where they have maintained their buy rating at a target price of 990 rupees, which the stock did cross today in trade itself. The brokerage expects Q3 revenues to grow, mainly due to the higher share of the less than loaded fleet in the freight division, the steady automotive demand, and the benefits of the multimodal logistics traction that has been catching up. And lastly, the new order for 2 ships that the company has made with a Japanese shipyard is slated for June 26, and it will increase their total capacity by 7,300 million tons. And finally, the brokerage expects revenue, EBITDA and PAT CAGR to be to the tune of 14, 16 and 17% over the term of FY23 to FY26.
Right. So, well, thanks so much for that, Mihika. It's quite a move for TCI, and of course we'll continue to keep that on our radar. But from there on, we move on to Godfrey Phillips, which is also buzzing on account of 2 large trades coming in. And now we have Mahima, who's joining us to give us an update on this one. Mahima, what's the context here?
Right, Agam. So as you rightly mentioned, there were 2 large trades, but before that, Godfrey Phillips had posted its earnings day before yesterday. The revenue was up 33.8%, EBITDA was up 8.6%. However, their margins saw a huge contraction of around 4%, from 22% to 18% it fell, and the net profit was up 6%. Now, if we try to understand why were the EBITDA margins under pressure, this was because their cost of goods sold have increased by approximately 62% year on year. However, the revenues have been good because cigarette volumes have grown by 25% in FY23 itself, and if you see, they've paid excise duty of 237.9 crores versus that of 192.5 crores in Q3 FY23. And if we talk about the large trades, as you rightly mentioned, there were 2 large trades of total 14 lakh shares which exchanged hands at an average price of 2,257. If we talk about the stock performance volumes, the stock is trading at 17.95 times its 30-day average. It touched an intraday high of 17.5%, and overall, if we see, the stock has been up over 17.6% in 6 months and 31.8% in 1 year.
Okay, well, Mahima, thank you so much for getting us that update on Godfrey Phillips. Moving on, we have earnings from Sun Pharma. That's one of your relatively larger pharma companies. It is advancing for now. And in terms of earnings, it does look like we are seeing growth on an intraday basis. Of course, it's come off and then again trying to inch back up. The positive, of course, is that EBITDA is rising by around 15.8%. Then there's a 30 basis points improvement in your EBITDA margins as well, coming in at around 27.1%. And net profit, it does seem lower, sure, but we need to, perhaps ascertain whether or not there are certain one-offs on account of which we are seeing that decline in profit on a year-year basis. Of course, we'll continue to keep okay. So pardon me. Net profit has in fact risen by around 16.5%. So it's the strength all around. And to a certain extent, we also understand that this is perhaps something which was expected because we've seen a lot of traction, positive traction fundamentally for a lot of these pharma companies. But let's not waste any more time and get in my colleague Varsha to give us an update on Sun Pharma. Varsha, what are you tracking?
Currently, I'm tracking Volta. So if you see, the stock is up 7% in trade today, and let's see the numbers behind it. So if you see, the revenue did beat estimates, EBITDA and PAT missed estimates. In fact, there was a net loss reported by the company. Now, the key highlights for the business are the unitary cooling products segment revenue was up 20%, but the project segment's revenue increased 51%, supported by healthy order book. But that international project business continues to face headwinds. Also, in fact, the key drag in margin was led by the international project, and also the expenses related to raw material, jobs and services climbed 55%, driving total cost up by about 35%. Now, we do have two brokerage reports on this. So one is UBS and Nomura came out with a report wherein they UBS have a neutral view, while Nomura has rated buy on Voltas. Now, both the brokerages have highlighted the reasons behind the results, and they are positive on their cooling business given low penetration and latent demand. And also, Nomura expects that there could be near-term losses which could drag FY24 EBIT, but they expect 4% of EBIT margins in FY25-26.
Okay, Varsha, thank you so much for getting us that update on Voltas. And of course, brokerages remain largely positive. And we've seen a little bit of an improvement in its bottom line as well, even though it has made a loss. But, that's not stopping the stock from moving upwards, up at as much as 7%. Sun Pharma, on the other hand, is continuing to make a new high on an intraday basis, and it's comfortably above the mark of 1,400 rupees per share as we speak. And I reckon that, yes, the investors do seem to like this counter. So that's in terms of Sun Pharma. Besides that, as far as the markets go, well, on the whole, it's turning out to be a pretty good day of trade. And the question really is that, can we sustain this as we move into the final hour of trade? That's a wait and watch. But on that note, it's a wrap on this edition of Large Trades, but lots more lined up on the other side. Stay tuned to NDTV Profit.
It's all about numbers today. Hello and welcome to India Market Close. I'm Neeraj Shah, and it's looking very, very strong for some companies and weak for some of the others. So, for example, I'll start off with the numbers on your screen. Welspun Living. You heard from Dipali Goenka in Davos as well about how strong they expect the story to look like. It's been mixed for textile companies by and large, but Welspun Living, it's not just a textile company, by the way, now that they are into home solutions, but there is a significant uptick that they've seen on revenues as well as margins. And I think as a result of that, Welspun Living, not Welspun Entertainment, but Welspun Living, which is 169 bucks, is up about 10% if I'm not wrong. So I think that's the key point. 11.5% now is Welspun. Let's change this stock, not Welspun End, but Welspun Living is the one I'm talking about. Very strong numbers, and the numbers are flashing on your screen. 74% uptick in EBITDA as well. Margins up 368 basis points. Strong showing, and the stock is duly reacting. So that is first. Then we have the pharma stocks, which are up and about. So Sun Pharma up about 3.5 to 4%. I think I've seen maybe Dr. Reddy's do reasonably okay as well. Piramal Pharma, which came out with a very good set of numbers, was also up and about. DRL is up about 4%, so strong show. Piramal Pharma up about 3.5%. So large, mid, small, that entire clutch of names, they have too done well in the session today. And what is sulking is stocks like L&T. So at the top of my head, I can think of Larsen & Toubro as being one stock that has been under pressure in the session today, has come off from the lows of the day, which is a good thing because, frankly, I mean, aside of a small margin miss, there weren't too many other negatives. And therefore, as has happened, each of the last 7 quarters, Larsen & Toubro has gained between 2 results. Could this time be different? Maybe, maybe not, but for now, seems to be looking okay. PB Fintech has given up some of the gains, but still up about 9%, so doing okay. Voltas about 7.5%, so that is doing okay. There is strength in Balaji Amines post-results, so that is doing okay. KPIT Tech about 5.5%, so that is doing okay as well. So these are a few stocks which to my mind look okay on the gaining side. On the losing side, on the index, of course, aside of Larsen & Toubro, there is Titan, which has come off a little bit in the session, so that is to be watched out for. But still, not too many losses. And on the broader end of the spectrum, Kalyan Jewellers, Metro Brand, Shyam Metals, and Sterling Wilson Solar are 3 or 4 names that stand out in trade. It's a show which is going to be packed with management. So we'll be talking to PVR in a moment from now. We'll also be talking to, and we will also hear out the management of Ambuja in just moments from now as well. And later on in the show, we'll get in Anshu Malik of Dabur to talk about what's happening at that end of the spectrum too, post Dabur numbers. So those are 3 names that you keenly need to watch out for. Do we have, I think we have a statement from Ambuja that we should try and play out and just give you a sense of what's happening there. So that is one thing to keep in mind. And then the questions to one PVR and secondly to Dabur would be what's happening or what is the sense around what customers are saying. So I think that is, there are some of the elements that we will keep in mind in the show today. Before we move further, the mid-cap stock of the day, to my mind, is KPIT Tech, simply because tech is not having a good rally per se. But KPIT Tech recorded net profit of 10.85% growth for the 3rd quarter. Sachin Tikekar, President and John MD of KPIT, spoke to me earlier today about the outlook for the next quarter and the quarters ahead. Listen in.
I have to say this has been another quarter that has been absolutely in line with our overall expectations. In terms of things that are in our control, I think things went as per the plan, whether it's on the engagement with the clients and the revenue side as well as the profits. I think they're a little bit more than what we thought, but in generally directionally in line. Of course, we have no control over the foreign exchange, and we just have to play it by the ear and see how it goes. Sometimes it works in favor, sometimes it doesn't. So what has happened, one change that has happened is our mix of business. Over the last couple of years, the growth in Europe has been extraordinary, and now there is growth in Japan. So Euro and Yen are playing a broader role in terms of our revenue mix. So that's the only thing that I can say. But overall, we are happy that we have had consistent growth over the last 14 quarters. And the plan is to try and stay on top of it.
Okay, some more numbers on your screen. Heidelberg Cement, and look at those numbers again. Margins for Heidelberg up 392 basis points at 10.8% versus 6.9%. So that number is looking okay. Okay, we're showing this earnings impact plate, but I was just trying to read out the numbers, and I think the numbers just look rock solid, really. Automotive Axle is the other one which has actually come off because the net profit numbers are slightly lower. But Heidelberg, I thought, came out with a good set of numbers, both on the margins as well as on the bottom line front. Maybe the top line is a bit of a miss. Cement is looking a bit iffy today, I must say. Actually, speaking of cement numbers, Ambuja too has had a iffy afternoon, if you will, down about 2%. And after ACC's heroics, Ambuja, maybe the street was anticipating a lot more. Ajay Kapoor is talking about the Q3 earnings of Ambuja and what went by. Just let's listen in to what he has to say.
Results and performance of Ambuja Cements for Q3 FY24. Ambuja has achieved stellar financial results marked by revenue growth and operational efficiency. Our net profit has witnessed a remarkable surge, reflecting the company's resilience and strategic initiatives in a dynamic market environment. The year-on-year consolidated performance for the quarter reflects a revenue increase by 2.8% of rupees 8,129 crores. The operating cost went down by 9.8% at rupees 4,526 per ton, a reduction of rupees 491 per ton. This is mainly on account of 21% decrease in energy costs driven by efficient fuel management. We achieved a 25% reduction in kiln fuel cost, now at 1 rupees 84 paisa per 1000 kcal, down from previous 2.45. With these improvements in revenue and cost, our EBITDA is rupees 1,732 crores, a jump of 70% YOY. The EBITDA per ton has increased by 65% to rupees 1,225, and margin expanded by 8.4 percentage points to rupees 21.3. We achieved 125% growth in profit after tax at rupees 1,090 crores, up from 488 crores, a jump of rupees 602 crores. Our consolidated cash and cash equivalent at the end of 31st December 23 remains at rupees 8,591 crores. This is post-acquisition of Sanghi Industries. Results on standalone basis reflect a net revenue rise of 7.5% at rupees 4,440 crores, in line with a 5.8% volume increment. The EBITDA grew by 33% at rupees 851 crores, with margins expanding by 3.7 percentage to 19.3 from 15.5. EBITDA per ton grew by 26% to rupees 1,046. A strong PAT growth of 39% at rupees 514 crores. Coming to strategic investments and expansions, Adani's total cement capacity reached 77.4 million, fueled by the commissioning of the new Ametha grinding unit, a recent acquisition like Sanghi Industries and Asian Concretes and Cement Private Limited. We are capitalizing on our successful acquisition of Sanghi Industries, which is on a path of significant improvement in EBITDA performance post-acquisition. With the integration of 400 plus channel partners after the acquisition, our emphasis is on strengthening and reinforcing our iconic ACC and Ambuja brands through the positioning of Har Ghar Hoga or Bhi Mazboot. With Asian Concrete, we will be able to strategically cater to a vast customer base across Himachal Pradesh, Haryana and Punjab, improving our profitability and market share. We are well on our path to ongoing growth in our brownfield operations, adding 8 million tons of clinker capacity at Bhatapara in Chhattisgarh and Maratha in Maharashtra. With these capacities coming into service, we will also enhance our ESG standards on the lines of 42 megawatts of waste heat, 30% AFR utilization, aided by green power for these new plants. This will allow 14 million tons of blended green cement new capacity by Q2 FY26. We have further approved 12 million ton cement grinding units at 5 locations. The 32 million ton additional cement capacity under implementation at various stages will take our total capacity to 110 million tons in the near future. Reaffirming our commitment to sustainable practices with an investment of rupees 6,000 crores in 1 gigawatt solar and wind power projects, we are aiming for a substantial increase in green power capacity, promising compelling economic advantages to our planned larger capacity of 140 million tons. We are also continuously increasing the share of alternate fuels and waste heat recovery systems. We will be reaching 186 megawatt waste heat capacity by FY25. In addition to our branding efforts, we have also robust and notable involvement with the technical and end user groups. Through our technical services, we are supporting ethical and environmentally friendly building practices, making a significant positive influence on society at large. While we have set out to achieve our long-term objectives, we are committed to sustainable growth with focus on water governance, sustainable livelihoods, women empowerment, uplifting rural infrastructure, and championing social inclusiveness. Cement demand in India will continue to grow at 7 to 8%, primarily fueled by investments in infrastructure and large-scale residential housing projects. This growth aligns strategically with the broader economic development goals of the country as we move from US $3.5 trillion to US $7.3 trillion economy by 2030. Looking ahead, we are optimistic about the future and are committed to sustaining this momentum. Ambuja Cements will continue to leverage its strength, explore new opportunities, and uphold the highest standards of corporate governance.
Right, that's Ambuja Cements and a statement from Ajay Kapoor about how the quarter went by. Now, just before we take that break, Jay Bala has joined us. He's founder and chief market technician at cashthechaos.com, and he catches the chaos as well, as he caught very well with Polycap some time back. He called it on the market some time back. Jay, I'm trying to figure out what is your view on the markets a day ahead of the budget. Are charts telling you something?
The charts is telling that, the banks are the weakest here, Neeraj, and thanks for the introduction. And, the banks remain the weakest pocket for the markets and the weakest link. So the best thing to do right now is obviously avoid banks or be very careful about what you choose out there. The Nifty is a bit ambivalent, but I think, if the markets were to drop below 21,650 on an intraday basis, the momentum will pick up on the downside. But on a slightly higher time frame, it can be argued it's bullish and bearish. My opinion is that it's slightly the bearish side has a slight edge over the bullish side. So as long as the markets remain below 21,800, it's probably a sell on rise on the market.
Okay. And, maybe we'll try and get Jay Bala sometime next week as well, post-budget is over, because FOMC plus budget could be a potent combination to determine the near-term course as well of the market. Jay, a bunch of managements lined up. So for the next 15-20 minutes, we might not be able to do justice to your intelligence, but we will do a full-fledged conversation in a few minutes from now. We need to slip into a quick break currently. When we come back, we talk to PVR, we talk to Dabur, we continue a conversation with Jay Bala, and we also get in Mehrbun Irani in the mix. Stay tuned.
Welcome back. You're watching India Market Close, and markets looking in fine fettle just hours before the interim budget. Meanwhile, PVR numbers are out for the third quarter. Consolidated revenue year on year is up 64%. At 1545 crores versus 940 crores, so a healthy bump up there. EBITDA numbers are looking in fine fettle, up 64% nearly at 472 crores. Margins at 30.55% versus 30.67%, so a bit of margin compression there. We'll talk about that with the management in just a second. And net profits are up about 20%. The hit or the pain point seems to be in movie production and distribution revenues, which have declined 48% year on year. Let me speak now with Sanjeev Kumar Bijli, Executive Director, and Gaurav Sharma, Senior Vice President, Corporate and Finance and Head IR at PVR Inox. Welcome, gentlemen. Thank you so much for speaking with us this afternoon at NDTV Profit. Let's go through the numbers first up. Mr. Bijli, may I start with you? EBITDA is looking healthy. What's contributed to it, and why the pressure on margins?
You're right. Obviously the EBITDA is looking good. It's strong because of our higher ATP. We had an ATP of about 271 rupees this quarter, up by 13%. And even the F&B sales, or the SPH as we say, has been up by 11% at 132 rupees per person. So these two, and the advertising income also has kicked in, and that has also done well with about 140 crores we have clocked in this quarter. But the overall admissions have been slightly muted. And I think that is the reason why the margins are looking a little lower than we had hoped for. So I think that is the whole picture for Q3.
Just to understand that correctly, if you say overall admissions, are we saying that footfalls have come down a bit? Is that the concern?
The footfalls, yeah, are slightly lower than the Q3 of last year, primarily because the films didn't perform as well as we thought they would in October and November. On paper, of course, these films looked like blockbusters or great films, but they didn't perform as well. But December was a great month. We had 4 excellent big films, Animal, Salar, Tanki, and Sam Bahadur, which contributed to high footfalls.
And how far are we from pre-pandemic occupancy levels, Mr. Bijli?
I would say that I think this coming financial year, once again, the lineup is looking very strong. It's not just the movie lineup, which is looking very strong, which is being contributed by all languages firing up, be it English, Hindi, and regional. I think one also has to be cognizant because of the lockdown and COVID. The movie production cycle also got disrupted, and therefore a lot of films got delayed in production and releasing, which I think this entire pipeline will settle in the coming financial year. Plus, we opened about 92 screens so far in the first 9 months, and we're opening another 70 screens in the last quarter. And these are all very strong, high-performing cinemas, concentrated and focused in markets where there's a high propensity to spend and watch movies, like South India, Pune, Mumbai, where people have a high propensity to spend. And these will obviously have a full year's operation. And the numbers from these cinemas, which will open up in this year, will contribute significantly to the admissions.
Mr. Gaurav Sharma, can you give us a sense of what is your contribution of F&B now to your revenues? And is it inching up, or are ticket sales still pulling most of the weight, considering they're up by about 11% year on year?
Yeah, no, F&B sales does contribute a significant portion of our revenues. In fact, in the first 9 months of this financial year, F&B has contributed roughly about 30% of our total sales. And this has been inching up year on year, as Mr. Kumar mentioned. The spending per head on F&B by consumers has gone up considerably. Year on year, we have seen almost a 10% increase in SPH. And when you compare it with pre-pandemic, the increase in F&B spending has been substantial.
Okay. Give us a sense about what's happening on the OTT side of things. Is there a hesitation about buying digital rights of movies? This question again for Mr. Sharma. And how does that play out and impact you?
Well, from the OTT standpoint, I think what we understand is that OTTs are definitely being selective in terms of the content that they're buying. Theatrical is continuing to be a preferred medium for release of films, and only when films do well theatrically, I think streaming platforms at that point in time decide whether to buy and at what price to buy. So I think from that perspective, theaters continue to be the preferred option for release of content by producers, and also consuming content by consumers is what we are seeing.
Gaurav, sorry, did I hear you say that the spending per head has gone up 10% because the data seemed to suggest it stayed flat, 133 or thereabouts, YOY?
No, last year, compared to last year, it has gone up. It was about 122 in quarter 3 of last year. It is 131 in quarter 3 of this year.
Okay, so but quarter on quarter it may have stayed flat. You expect this trend to inch up a little bit as the calendar goes by any chance? Is there something like that can be estimated?
Yeah, definitely. I think as movies continue to perform well at the cinemas, people will start coming back. We have a very strong pipeline when they visit cinemas. What we are seeing is that they are not hesitating to spend on F&B. So our belief is that this momentum of F&B spending, the growth that we have seen this year will continue going forward as well.
All right. Just one last forward-looking point, Mr. Bijli. Like you mentioned, in this quarter, maybe December had 4 blockbusters, but overall, the movies didn't perform as was expected or didn't draw audiences as expected. What is the lineup looking like for Q4 and going ahead? What do you expect to close the year at?
The content lineup for the next 2 months, I mean, of course, Jan is almost over, and Fighter was a big film that came out on the 26th of January that is still doing brisk numbers. In addition to that, we have a few very strong Hindi films releasing in the month of February itself, which is one is with Shahid Kapoor. There is a film with Ajay Devgan. There is a couple of regional strong films and even Hollywood films. So it's looking very strong, the outlook of films. Plus, as I said, we're opening some of our megaplexes in this quarter as well, a 14-screen complex in Bangalore and 14-screen complex in Pune and a 9-screen complex in Ahmedabad. And all these large format, large megaplexes contribute substantially to the footfalls when we open, because there are destination malls, and fueled by an exciting lineup of films, the admissions are looking pretty healthy for this quarter as well.
All right, so we'll wait and see how many people go to the movies. Clearly, people are still going to the movies despite this OTT scare. So alive and kicking there. Thank you so much, Sanjeev Bijli and Gaurav Sharma, for speaking to us. The team at PVR talking about their Q3 numbers. All right, Mehraboon Irani in the house, in our studios today. Mehraboon, great to have you here.
Hi.
Before the budget, before the FOMC, what's going to matter more tomorrow? Who's going to matter, Mr. Powell or Mrs. Nirmala Sitharaman?
Well, I would say that it's a vote on account ultimately, and I think the expectations are much more than what possibly will be spelled out tomorrow. It's an interim budget, so we are going to have a proper budget in the month of June.
But in 2019, the interim budget was the proper budget.
Yeah, and there were some concessions given to the salaried class or the middle class, I think a standard deduction, which Mr. Piyush Goyal announced.
PM Kisan Nidhi scheme was announced in 2019.
Is that going to have an impact on the market?
Correct.
So I think there will be some social schemes announced. I am quite sure that there will be some thrust being given to some Jal Vikas, that is the water schemes. There will be possibly some layout being spelled for things like infrastructure, railways. Will it be the same amount? All those things beyond the point will not matter. That's my view. Coming back to your question as far as Powell goes, I think somewhere the consensus is coming slowly that we are not going to have a rate cut happening till June, July, August. And I think in my last visit over here, I think on the very first day when you launched this channel, I had mentioned, and I have not changed my view, that somewhere we will have an election verdict which the markets will like. We will have a Powell reducing rates somewhere in June, July, and hopefully, which is not in my hands, not in your hands, that the monsoon prediction will be better than what we had last year. A combination of these three factors, I promise you, this is my gut feeling, and I have a right to go wrong. we will have an explosive high as far as the markets goes, and people will just go on refusing to believe it. Now, after that, what? Let's not discuss it right now.
Fair point, because then the situation might change as well. So fair point completely. Okay, we'll talk to Mehboob Irani about some of the individual movers as well. But Jay Bala has been with us, and Jay, like I said, a few earnings, so I had to bear with that. You've given us a sense of you believe that in the near term, maybe, just maybe, the downsides might have a slightly more weightage than the upside. Within that landscape, Jay, and banks are weak is what you said, but within this landscape, are there individual themes or stocks that stand out for you?
Yeah, I think as a theme, real estate is still probably not talked out, but that could be due to the weightage of DLF and DLF. That the rest of the pack, like Oberoi, they and others, like Gojal Properties, they could be lagging DLF. Even autos as a theme, they might still be doing okay, but overall an extreme amount of caution is required because even if there were to be a new high, which is a very low probability, new high, when I say new high, new all-time high, it's a very low probability, and even if it were to make, the market's not going to sustain. That's the theme I'm working with. And when it comes to US 10-year yields, I had said in December, I'm not sure if it's for your channel, and I said there's a January surprise due for the rates, and Fed is likely to backpedal when it comes to rate cuts. Already, the future Fed fund rates futures have dropped back, and as Mehboob pointed out, a lot of factors are pointing to a delayed rate cut, if not no rate cuts. That's what is going to happen. We're going to have a big surprise when it comes to US 10-year rates. We're going to have higher rates, probably much above the 500 basis points we saw last year.
Okay, well, surprise, surprise, HDFC Bank on a number of days now is supporting the markets in the green, which is a good thing. Let's take a slip into a quick break, come back and continue our conversation with our guests.
Reception downstairs.
welcome back. We're just about 25 odd minutes away from close on a day that is looking very, very excited about the vote on account. What's happening on an expiry day? Agam is standing by with all the details. Agam, fine fettle today on the Bank Nifty.
Yes, absolutely. So what's really happened through the course of the day is some amount of strength returning to the markets, but there's still caution. Of course, we don't necessarily mean that there is going to be a lot of traction, but we're seeing a little bit of an increase in open interest towards longs at the moment, at least as far as the Nifty is concerned, considering the underlying has advanced by around 0.9%. The Bank Nifty, on the other hand, showing a lot more strength. In fact, up 1.4%, largely on account of HDFC Bank, Axis Bank and ICICI Bank. And because of that, because we've seen so much volatility in the Bank Nifty, there's also more short covering coming through, indicated by a decline in open interest. As far as the Nifty options market goes, in today's day of trade, well, traders did take that as an opportunity to perhaps go and create positions around the 21,600 mark, as you can see on your screen there. Or in terms of your overall distribution, let's pull that plate up as well. And that's where you are still seeing a lot more resistance building around 21,700, 21,800, even though we are teasing those levels at the moment. Of course, as far as the Bank Nifty is concerned, and it is the weekly options expiry, do remember in the morning, I had pointed out that 45,500 would be the pivot. Not only has the Bank Nifty moved above that mark, but it's also now likely to close somewhere around the 46,000 mark right here. In terms of stocks, again, we are keeping an eye on longs building up in Voltas and Dr. Reddy's. Both of them, of course, Voltas on account of earnings, Dr. Reddy's on account of that, one of the drugs and positive development there. And on the other hand, shorts building up in L&T and Siemens. And of course, in terms of those stocks which saw unwinding in trade, we're looking at about a short covering for Exide, PNB, Atul, AU Small Finance, as well as Federal Bank. We'll be watching out for a whole host of these counters, but as far as the benchmarks are concerned, for now, they're trending positively ahead of the union budget.
All right, so positive cues there on the union budget coming in. Now let's look at what's working today, and the story of the day is no doubt healthcare. The Nifty Healthcare Index up about 3%. Some cracker numbers have come out. DRL, let's look at Sun Pharma. Very exciting stuff there. Even Piramal Pharma has been doing very, very well. Mehraboon and Jay with us on the show. And, let me quickly first go across to Jay and get his take on some of these counters that we've been talking about. Jay, is this a defensive play we're seeing? Is there anything that you think is worth acquiring at these levels in the healthcare pharma space?
See, the healthcare sector has been my favorite since October of this year, and it's been outperforming even my expectations. And my expectation was about, from 14,500, I expected the index to touch about 17,100 to 17,500. It's right now at 17,900. So, I'm talking about Nifty Pharma Index. So, but it does look like, it's still not done, but it's looking like it's close to exhaustion. But within the pharma space, I like Torrent, Lupin, and Aurobindo and Glenmark, and rather than, Cipla and Dr. Reddy's. But it could be that Reddy and Cipla may be at the nascent stage of their move. But looking at the overall index, it does look like, we are very close to an important top for pharma index. Probably should start unloading the profits that you've made so far, because the objective I see, the next level is about 18,400. So not too much of upside from here, but it's still bullish and the top performing sector.
But the individual names are doing very well, select few of them. Mehraboon, anything out there in the pharma pack? Because sporadically the numbers this earnings season have not looked bad.
After 6 years of being negative on this sector and being negative on the frontline stock in the sector called Sun Pharma, I have turned positive as far as Sun Pharma goes.
Sun Pharma,
yeah.
Okay.
The balance sheet is good. Domestic business, I think there is no parallel if you ask me. They are increasing the sales force. They have got decent cash in the books, and with Taro now coming under his fold, there will be further cash, in which I'm quite sure they will make some more acquisitions. I have not seen these numbers which have been announced right now closely, But I personally believe that Sun Pharma among frontline stocks should be the best bet going ahead. As far as individual names goes, I like names like a JB Chemicals, I like names like an FDC, I like names like a Kaplan Point Labs. But this is the space which I was negative. I know from industry sources whom I know as friends that possibly the worst for the sector is over. But does it mean that you go ahead and buy? You are buying it only because the market, and knowing that things are not very good for the sector, has brought down prices to levels from where the downside may not be much. So you go and buy it as an opportunist, you make some money, but are there any positive trackers? Honestly, not too many. The worst could be over, but not many positive triggers right now. So from the price angle, you are going to make some money in the short run, which is what is happening over the last 2 months. But as far as individual stocks goes, I think you need to make your study. My personal bet, which I mentioned, with clear disclosure, I'm holding those 4 stocks.
Yeah, what about DRL, Merabun? Any thoughts on DRL? It's been buzzing today. Numbers have beaten expectations on the face of it, at least. And has anything fundamentally changed for the sector, or are they just playing catch up?
I think, as I mentioned earlier, I think the worst for the sector as far as the developed markets goes, companies which had an exposure in developed markets, especially an economy like US, I think the worst possibly for them is behind them. Are things going to improve overnight? Answer is clear no. Clear no. But then the point is the market, anticipating these problems, had discounted the prices to levels from where the downside looks capped. As far as DRL goes, the numbers look interesting, the numbers look good, but at the price at which it is, I honestly would stick my neck out and say I don't see more than 5% from here on the upside.
Okay. Well, that's as far as pharma goes. By the way, some more numbers trickling in. We've already spoken about Wellspun Living, which had a fabulous set of numbers, and that stock was doing well. I think Jubilant FoodWorks numbers are not looking all that great, and a weak set of numbers came in for Piramal Enterprises as well. That stock saw profit converted to a loss, or rather a corresponding loss in this quarter. NPS may have improved marginally. Vishwanath Nair, my colleague, caught up with Jairam Sridharan, Managing Director of Piramal Finance. Listen in.
On December 19th, RBI had come out with a circular that said that any financial institution that has exposure to alternative investment funds, if you also happen to have exposure to one of the underlying clients of the AIF, then you should go ahead and make provisions. We had made a stock exchange exposure in AIFs. That's what we have dealt with during the course of the quarter. We had 3,500 crores of total exposure into AIFs. Of that, about 1,700 crores was linked to some sort of assets or accounts where we had exposure. We had a lot of debate internally, but then we decided eventually to write down the entire 3,500 crores just to be very safe and fully compliant. So we've gone ahead and taken a full 3,500 crore write down on our AIF portfolio, and that on a post-tax basis has resulted in about 2,700 crores of hit. That 2,700 crores, against that we have roughly 300 crores of regular profits, which is what gets netted off, and you end up with roughly 2,400 crores of reported losses that you mentioned in your opening remarks. So that's broadly what has happened. These AIFs, the 3,400 crores worth of write-downs that we have taken, good quality assets. Cash flow has been coming in from these assets. And so the accounting action that we have taken now of taking full provisions doesn't change the economic value of these assets at all. The economic value continues to be what it was before we did the action. We have already received 1,100 crores of cash flow from these assets in the prior periods. Just in this financial year, in the last 3 quarters, we have received 700 crores of cash flow from these AIF instruments. We expect that to continue in the quarters ahead as well. And now that we have written down that entire exposure to zero, all the future cash flows that come in from those AIF instruments will accrue to us directly through P&L. And we do expect almost all of that AIF investment to be recouped over the next 2 years.
That's the word coming in from Piramal Enterprises, but it's a day of numbers today, and automaker Maruti, the big one, came out with their December quarter earnings. Revenue and net profit have jumped. Margins have expanded. Vinay is joining us to give us the qualitative analysis of the numbers. Vinay, what are the highlights?
Yeah, so Maruti Suzuki's profit beat estimates with a 30% rise due to higher sales and increased share of SUVs. Sales rose 7.6% to 5.01 lakh units in the quarter. And within those sales, if you see, the utility vehicle sales rose 60%, 1.5 lakh units. So you can see that clearly the utility vehicle shares have risen in the overall sales, and it is clearly benefiting the company. And if you look at a combination of higher volumes and rise in average ticket prices has also aided the company's performance in the quarter. Revenue rose 15% in the quarter, and that is also driven by the SUV sales, and margin expanded to 11.7% compared with 9.7% like last year. So this margin expansion has been aided by lower commodity costs. And if you look at the highest ever quarterly exports, that has also aided the margins of the company. If you look at the lower commodity cost, how they have impacted the company's financials, the material cost as a percentage of sales fell 170 basis points to 74%. So that is how the companies have fared in the quarter, and a much better looking future for the Maruti Suzuki company.
Vinay, thanks for that. Well, so, auto and auto-linked stocks haven't looked too bad. Mergun, what did you get a chance to look at the Maruti numbers carefully? And if not, anything else in auto that has stood out for you in this quarter?
I would say that I would prefer some of the other names, not the frontline names. I think that as far as the two-wheelers goes, I said last time also, I ultimately see a Bajaj Auto going to 10,000. If you are an investor, as far as the other names goes, the four-wheelers, I've always liked Tata Motors.
What's happening
at
there?
this price?
No, but what's happening? What's happening in Tata Motors? Come on, tell me.
A lot of things outside the domestic sales and whatever you were talking for the last 2 years are happening. The company has ventured out, is becoming a leader, and quite a few new things which ultimately is going to come out. Now, a lot of things are out of sheer perception. This will happen, this will happen, this will happen. So at 900 rupees, while I'll continue to hold on to Tata Motors, I'm not going to recommend it afresh. I would go with names like a Force Motors. I would like to go with a name like an Auto Corporation of Goa, which ultimately is directly, indirectly a Tata Group company. I will go with those names because I find them valuation was cheap. I think, Neeraj, we need to accept one thing. While I'm saying we are going to see an explosive new high, there are quite a few pockets where I feel they're grossly overvalued.
Yeah, sure.
And a pullback is going to cause a hurt to a lot of people. People are just refusing to sell. People are not knowing the valuations that they are paying. So as far as auto names goes, I feel for the time being, they are all fully valued. Most of them.
I have a quick follow-up. We're talking about auto names or auto-linked names which are seeing higher valuations than seeing selling. KPIT Tech saw that selling. It's an auto ERD company, and hence I'm asking you. Post these numbers, 2 days on a trot now. The stock has recovered all of that lost ground and more. What do you track that at all?
I don't track it off late, but I have met the management in the past, and I believe and I have very high rating for them. So I would say that any sharp pullback which happens in the stock, you can go and buy it, because the management somewhere, I would give them a very high grade as far as my ranking for them goes. But I'm not tracking the stock off late, so not very fair on my part to comment beyond a point.
Okay. Jai Bala, autos, Maruti higher, Tata Motors higher, some of the auto-link names like KPIT Tech higher. Are any of the charts looking attractive?
Yeah, definitely. KPIT is definitely looking attractive. The high it saw in December, it's like an incomplete structure for me. And, probably further higher highs due. Probably all-time highs too, somewhere in the region of 1,800 to 2,000 probably. Obviously, it's a volatile stock. And even I've been saying for several months now, I prefer two-wheelers within the auto space rather than the four-wheelers. And I've been bullish on Bajaj and TVS Motors. And of course, within the four-wheeler space, Tata Motors is doing much better than Maruti or Mahindra and Mahindra. So, if you got to be there, obviously the ranking is Tata Motors and rest of the pack out there. So that's my pecking order for the moment. And did I miss any other stock in this space?
No. I mean, I think you kind of gave me my answer, Jay, that I was looking for. So it's good to get that a feel of what's happening across that pocket. Now, let's try and talk about Dabur and the numbers that came out. Ankush Jain, CFO of the company, Johnson, right now to talk about the quarter and the outlook ahead. Ankush, good having you. Thanks for taking the time out and speaking to us. How do you characterize what's happened in the quarter, and is there a turn of events? Because we are hearing fairly divergent trends around the pain in the rural market versus the infra push by the government leading to higher spending possibilities from the rural market because the bank account balances are strong. So you guys are the exact pulse, or know the exact pulse of what's happening in the market. So tell us what happened in the quarter gone by. How do you expect the quarter which is currently on to go like?
Yeah. Thanks, and first of all, good afternoon to you and all your viewers.
Very good afternoon.
And thanks for having me here. Just to start with on our overall quarterly results, while the quarter has seen amidst the challenging environment, where you see the contraction in demand and etc., but our revenue has grown by 7% and almost 9.6% in constant currency, which is a leading industry growth, which is also coupled with gain in market shares and also increasing in our route to market, increase in villages, etc. So we are pretty confident that with this growth and gain in market share, our momentum continues, and the strategy of our power brand to power strategy, our route to market, increase in villages, outlet coverage, salesman efficiency, etc., is working pretty fine. And this was pretty broad-based growth, with international business also growing by 14%, India volume growth by 4%, which was one of the highest in the industry. And on top of it, our operating margins also expanded 50 bits, and on a like-to-like basis by almost 120 bits, because there was a one-off or an abnormal cost in the base in the current year. Having said that, we continue to gain market shares, in almost 95% of our categories, whether you take highly competitive categories like hair oils, where we gained 140 bits, juices and nectars almost 20 bits. Chyawanprash, though there has been a stress in consumption, but we still gained 151 bits market share. Mosquito repellents almost 1,000 bits. So it's backed by good fundamental growth, which means the brand equity is resonating with the consumers, and there is attraction of our brand, even amid this challenging, stressful environment. Now, the second part of the query was how do you look forward in Q4, which is the current quarter. While we expect a similar momentum to grow, and we are still, waiting for summers to kick in, because most of our beverage season, sales will start happening by end of this quarter. Likewise, we're also pretty hopeful at this point of time as I speak. The winters were delayed, so there's some bit of traction on our even winter portfolio, though the results are yet to be seen from the market syndicated data. But I think we will continue with our growth momentum the way we have been doing. And on a YTD basis, our growth is close to 8%. On a third part of the query in terms of how is it divergent to the industry? Yes, even we have been noticing that our growth indicators are pretty divergent to what has been a commentary by some of the other players. While we see that rural is still lagging, and it is almost 10 or 11 quarters in a row where rural growth for the industry as a large is lagging urban. However, the point is that the delta between the two growth rates is merging or converging. Earlier, it used to be as high as 500 to 600 bits lower growth in rural. Now the growth is lower by only 200 bits. Having said that, for us it is exactly the contrary. For us, the growth in rural is almost 200 bits higher than urban in the current quarter, and there are various reasons for that. As I said earlier, because of our operating margin expansion and because of deflation, our gross margin expansion, we have been investing ahead of the curve, not only in power, in brand building, but also in our route to market. So we have increased our village coverage. We have increased our, village level entrepreneurs. we have increased our distribution footprint. So that's giving positive results. Yeah.
Got it. Ankush, I'm just trying to understand, based on the trends that you would have seen in the quarter, maybe some spillover effect, maybe the trends in the first month of the current calendar, how do you think Q4 shapes up? And how do you think overall as a year you could end with? Simply because, meeting expectations is one thing. Is there a possibility by any chance that you could even beat what or expectations or estimates that you would have started off with?
Yeah. So while I said, our growth momentum will continue in a similar range as we have done in quarter 3 and also at a 9-month level. It's pretty early at this point of time to comment on the exact numbers of Q4.
I don't want exact numbers, Ankush. I'm just trying to get a flavor.
Yeah.
Please appreciate. I'm not wanting exact numbers. Understand you can't give me.
Yeah. So I think it will be a similar range to what we have done so far in 9 months and also in quarter. They're almost similar. So we are I think, hopeful of at least meeting these numbers with the trend. However, having said that, just of late we have seen some liquidity pressure also in the market. So we are still evaluating, and let's see. And we are hopeful of that. Yeah.
Okay.
Ankush, hi, Tamanna here. Just a couple of questions. I'm interested in what you're saying about your rural growth outpacing your urban and the gap also closing industry-wise. What is your forecast for rural growth and rural consumption? How do you see that panning out?
Yeah. While I've always been optimistic of rural because the per capita consumption in rural industry is the least compared to urban. We thought it will overtake urban. We thought it a quarter or so earlier. But it has been somehow prolonged or delayed. Maybe a couple of reasons. The lag impact of the capital expenditure of the government is yet to be seen. But I think while we are certain that the growth momentum should accelerate or be at least in line with urban, it's only a matter of timing, whether 2 months from now or 3 months from now. Once also, with the election year, and elections now around the corner, I think a lot of spending power will go into rural, plus the lag impact of the capital expenditure, which will also get into. So it's only a matter of time. I can't say with certainty, 2 months or 2 quarters, but on a mid to long term horizon, we certainly feel that rural should outpace, given for every category, it is very under indexed to urban. And the aspirations of rural consumers are definitely increasing. And also now, with more of modern trade and e-com channels, accessibility going to rural, that should also give a very flip in the mid to long term. Yeah.
Yeah, one last question, Ankush, because I'm speaking with you on the eve of the interim budget, and we're talking about push to rural consumption. What do you expect or hope to see in this direction?
Yeah. Hope to see in the election or what?
The budget tomorrow, interim budget.
Tomorrow's budget, yeah.
Yeah.
So while it's a vote on account budget, but while we see that the government will continue its impetus and momentum on the capital expenditure, increased outlay towards that, more infrastructure, because there is a direct multiplier impact on the consumption. It increases more jobs, employment. Puts more money in the hands of consumers, especially rural. So I'm sure, with the current government focus on infrastructure development, it should be positive, and they will continue this. Yeah.
Ankush, much appreciate you joining in. All the best with some of the market share gains that you've had in the portfolios as well, and keep up with the margin show. Thanks for taking the time out. Looking forward to talk to you again soon.
Yeah. Thank you so much.
All right. Just about markets ending, so we couldn't get in those details out, but it's 5 minutes left for the markets to shut shop. And if we just look at what they have done, while one can't say that we've reversed the losses of yesterday, but I think at 0.88% for the Sensex or for the Nifty, you have to admit that this turned out into a fine session of trade ahead of the budget. Yesterday, the markets did the unexpected. Today, quite stunning, the kind of gains that we've had in the large caps as well. Mehrbun, a lot of people believe that if you get HDFC Bank at the levels that you're getting at the valuations that you're getting at, it's a steal. Do you think so?
Absolutely no complaints with the numbers, and I find it very amusing when people say the numbers are not very good. We have to understand that it's going to take at least 2 to 3 more quarters for things to settle down as far as the merger goes. So as far as I know, there's nothing wrong with the bank. It's doing very well. Numbers will be good. It's only that the loan book of HDFC got transferred to HDFC Bank, and we all know that the loans, home loans, are always at a lower rate as compared to, say, a consumer loans. So that is where some margin hit happens. Point number 2 is where the loans get transferred, you have credit deposit ratio becoming 110%. It will take its own time to play out, maybe a couple of quarters more. Now, as far as the stock goes, yes, if I'm going to look at things for the next 2-3 years, I'm going to earn money. Maybe over the next 1 year, I will earn money. But in the meantime, it is distinctly possible the stock may shed another 5, 7, 8, 10%. I'm not ruling it out in the shorter term. But where is the hurry to buy into it right now when there are better opportunities relatively in the PSU bank space? That's the way I would put it. So HDFC Bank, I'm holding it. I know that it's not going to do anything for me, but it's such a great bank. I'm not in a hurry to sell because I've got other things in my portfolio which is possibly taking care of the loss I'm suffering in HDFC Bank right now. But if you are asking me that should I buy the stock for the next 1, 2, 3, 4, 5 months, my answer would be no. Wait for some more time. I think next 2 quarters, things should play itself better for HDFC Bank. In terms of operating performance, I don't see any problem.
All right, Mehrbun, great to have you in the studios.
Thanks a lot.
We have just about 3 minutes to closing. I'm going to take a quick last call from Jay on BTST. Is there a long list or no list right now, Jay? Till you decide what's going to happen tomorrow?
Yeah, there is opportunity out there, but as I said, I've been bullish on the real estate sector. So DLF can be a BTST, but the stock has to be pretty tight. Or if you can afford to hold on for a little bit longer, like more than just one session, probably more opportunity there for price objective close to 860 to 875. So positive on DLF, and trend is I'm negative there. It's an STBT there. I need to put a stop at about 30, not a STBT, more like a positional chart. It's got a stellar run since 2020, 2021. I think that's coming to an end. Although it's up for the longer term, we could see extreme short-term correction there, somewhere close to 2,700.
Wow. Okay, that's a steep one. Jay Bala, maybe the next time that we speak, let's see what's happened to trend, because you are called Polycap so well. Let's just see how this one behaves. But thanks for your time today. Mehrbun Irani, thanks for your time today. Sorry we were not able to do justice, but a quick market wrap. We haven't even discussed stocks like Zen Technologies, which has been on an upper circuit for 3 consecutive days. And that's the power of good earnings. And we've seen some bit of example today with Welspun and some of the others. But, okay, thanks for that. Let's first get the heat map up, because the Nifty and the Sensex we know are doing well. Let's see what's aiding this move in the session today. Dr. Reddy's 4.5% out of nowhere. We're talking about autos doing well. Look at Eicher. Look at Mahindra and Mahindra. Look at Maruti. I think that whole bucket, Tata Motors, that whole bucket. So it's a day that belongs to pharmaceuticals and autos. Very unlikely for these to have a common trend, but that's what we're seeing in the session today. Look at Pharma. Reddy's, Sun Pharma, Divi's, Cipla. It's a really strong show. The Adani Twins, Enterprises and Ports are doing well. There is some bit of strength in Ultra Tech as well. So Ambuja's issues for the quarter, and the stock is down today, has not impacted some of the other cement names. And just 3 losers, the principal one being Larsen and Toubro, down in the session today. So that's the long and short of what's happened in the large cap end of the market. We are almost done. Just quick advanced decline ratio check to just show you what happened at the broader end of the spectrum today and how we stayed good for a better part of the day. And you can argue that it's come off a little bit from where it started off, maybe, or where it was at the first 1 hour. But it's not a bad advanced decline ratio, and I think the markets will take it with both hands. From Tamanna and me and the team that put this show together, thank you so much for watching. We'll be back tomorrow with all the budget conversations from 8 a.m. till 4 p.m. We'll be with you, telling you in the most simple language, with the best of guests, about what to do ahead of the budget. What is the budget statement looking like? And we'll analyze that with the best experts post the budget statement as well. Shh. Start. Well, strong day for the bulls ahead of the budget, ahead of the FOMC, I must say. A very strong move, one that was unexpected, much as yesterday's fall was unexpected. And banks leading the way, 1.4% up, courtesy HDFC Bank. But the Nifty and the Sensex were today punctuated by gains to the auto pack and the pharma pack. Frankly, that was it. Bring up the mid cap and the small cap indices once and just see what's happened there. Look at the market breadth. The advanced decline ratio was solid. It was looking very, very strong for a better part of the day. And this explains why. 1.6% gains for the mid cap index and over 2% for the small cap index. Just shows you the kind of gains that happened today. Bring up the market breadth very quickly before we get to the individual movers. And you can see how strong it stayed for throughout the trading day. Good, solid show. Bring up the heat map, a peppering of green, very little red. I'll start off with the red because there is only one stock worth talking about, Larsen & Toubro, down 4% after the results. This might also get corrected at some point of time because frankly the numbers were not so bad as well. Let's wait and watch what happens going ahead. But Pharma and Auto, look at the top list. And there is Dr. Reddy's, there is Sun Pharma, there is Divi's and there is Cipla from the Pharma pack. And then there was Auto. So Eicher Motors, Tata Motors amongst the gainers. There is Mahindra and Mahindra. There is Maruti up 2% after the numbers. So strong showing today. Dr. Reddy's, Maruti, as well as Sun Pharma were all result reactions. So very, very solid moves there. Then if you just look at the individual movers within that index, beyond, like for example, Nifty Pharma, if we can pull up and just show you what happened there. Just one index that I want to show, the Nifty Pharma gainers. Look at that. Dr. Reddy's, Gland, Biocon, Laurus Labs, Lupin, everything had a great move. So just goes to show how strong the moves were. And even at the broader end of the spectrum, just quickly, the last thing that I want to mark are some of the stocks that would have done well at the mid cap and small cap end of the market. So if we can get up the BSE 500 gainers or the top three movers on either the BSE mid cap, BSE small cap, what have you, you will see what I'm talking about. Some pretty strong moves at a lot of broader end of the spectrum stocks. Voltas, not so bad numbers. The stock market had gone into the results short, and that stock recovered. PNB on the fundraise recovered. Gujarat Gas about 4.8% higher, as also M&M Financial a result reaction, and Concor about 2.5%. So strong showing for a clutch of names in the session today. All in all, just the kind of data the bulls would have wanted ahead of the budget. Yeah. It's slightly over 2 minutes, but it's okay.
Benchmark indices closed higher ahead of the interim budget. Broader markets outperformed the Nifty. All sectoral indices closed in green. And Parliament's budget session begins. President Murmu, while addressing the nation, says Make in India, Atmanirbhar Bharat are now our strengths. Prime Minister Modi warns against democracy disruptions in the Parliament. And Maruti Suzuki's third quarter profit rises 33%, beats analyst estimates on the back of higher sales and an increasing share of sports utility vehicles. Ambuja Cement's third quarter standalone results miss estimates on lower volumes. Profit grows by 39%, margins expand by 368 basis points. Two companies to file IPOs. Northern Arc Capital plans to raise 2,000 crore rupees through the offer, while Blackstone-backed Aadhar Housing to refile IPO papers with reduced size. The company plans to raise 4,000 to 6,000 crore rupees. These are NDTV exclusives. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host, Smriti Chaudhary. As always, we bring to you the market headlines along with national and international newsmakers. Now, before we move on to the show, let's see how the markets fared today. I have my colleague Neeraj Shah, who's joining for a quick market wrap. Neeraj, how did the markets fare today ahead of the budget tomorrow?
Well, strong day for the bulls ahead of the budget, ahead of the FOMC, I must say. A very strong move, one that was unexpected, much as yesterday's fall was unexpected. And banks leading the way, 1.4% up, courtesy HDFC Bank. But the Nifty and the Sensex were today punctuated by gains to the auto pack and the pharma pack. Frankly, that was it. Bring up the mid-cap and the small-cap indices once and just see what's happened there. Look at the market breadth. The advanced decline ratio was solid. It was looking very, very strong for a better part of the day. And this explains why. 1.6% gains for the mid-cap index and over 2% for the small-cap index. Just shows you the kind of gains that happened today. Bring up the market breadth very quickly before we get to the individual movers. And you can see how strong it stayed throughout the trading day. Good, solid show. Bring up the heat map, a peppering of green, very little red. I'll start off with the red because there's only one stock worth talking about, Larsen & Toubro, down 4% after the results. This might also get corrected at some point of time because frankly the numbers were not so bad as well. Let's wait and watch what happens going ahead. But Pharma and Auto, look at the top list. And there is Dr. Reddy's, there is Sun Pharma, there is Divi's and there is Cipla from the Pharma pack. And then there was Auto. So Eicher Motors, Tata Motors amongst the gainers. There is Mahindra & Mahindra. There is Maruti up 2% after the numbers. So strong showing today. Dr. Reddy's, Maruti as well as Sun Pharma were all result reactions. So very, very solid moves there. Then if you just look at the individual movers within that index beyond, like for example Nifty Pharma, if we can pull up and just show you what happened there. Just one index that I want to show, the Nifty Pharma gainers. Look at that. Dr. Reddy's, Gland, Biocon, Laurus Labs, Lupin, everything had a great move. So just goes to show how strong the moves were. And even at the broader end of the spectrum, just quickly, the last thing that I want to mark are some of the stocks that would have done well at the mid-cap and small-cap end of the market. So if we can get up the BSE 500 gainers or the top three movers on either the BSE mid-cap, BSE small-cap, what have you, you will see what I'm talking about. Some pretty strong moves at a lot of broader end of the spectrum stocks. Voltas, not so bad numbers. The stock market had gone into the results short, and that stock recovered. PNB on the fundraise recovered. Gujarat Gas about 4.8% higher, as also M&M Financial a result reaction, and Concor about 2.5%. So strong showing for a clutch of names in the session today. All in all, just the kind of data the bulls would have wanted ahead of the budget.
Thank you, Neeraj, for that. We saw Maruti closing 2% higher today, and that's on the back of profit beating estimates, and it surged by 33%. Revenue also grew and margins expanded. My colleague Vinay joins us to give a snapshot of the earnings. Vinay, tell us the key highlights from the results.
Yeah, so Maruti Suzuki's profit beat estimates with a 30% rise due to higher sales and increased share of SUVs. Sales rose 7.6% to 5.01 lakh units in the quarter. And within those sales, if you see, the utility vehicle sales rose 60%, 1.5 lakh units. So you can see that clearly the utility vehicles shares have risen in the overall sales, and it is clearly benefiting the company. And if you look at a combination of higher volumes and rise in average ticket prices has also aided the company's performance in the quarter. Revenue rose 15% in the quarter, and that is also driven by the SUV sales, and margin expanded to 11.7% compared with 9.7% like last year. So this margin expansion has been aided by lower commodity costs. And if you look at the highest ever quarterly exports, that has also aided the margins of the company. If you look at the lower commodity cost, how they have impacted the company's financials, the material cost as a percentage of sales fell 170 basis points to 74%. So that is how the companies have fared in the quarter, and a much better looking future for the Maruti Suzuki company.
Thanks, Vinay, for that. That were the results of Maruti Suzuki. But big day for results. Ambuja Cements also came out with its third quarter numbers, and it missed estimates on lower volumes. Standalone profit rose 39% year on year. Let's listen into what CEO Ajay Kapoor has to say about the earnings.
Ambuja has achieved stellar financial results marked by revenue growth and operational efficiency. Our net profit has witnessed a remarkable surge, reflecting the company's resilience and strategic initiatives in a dynamic market environment. The year-on-year consolidated performance for the quarter reflects a revenue increase by 2.8% of rupees 8,129 crores. The operating cost went down by 9.8% at rupees 4,526 per ton, a reduction of rupees 491 per ton. This is mainly on account of 21% decrease in energy costs driven by efficient fuel management. We achieved a 25% reduction in kiln fuel cost, now at 1 rupees 84 paisa per 1000 kcal, down from previous 2.45. With these improvements in revenue and cost, our EBITDA is rupees 1,732 crores, a jump of 70% YOY. The EBITDA per ton has increased by 65% to rupees 1,225, and margin expanded by 8.4 percentage points to rupees 21.3. We achieved 125% growth in profit after tax at rupees 1,090 crores, up from 488 crores, a jump of rupees 602 crores.
Well, that was the CEO of Ambuja Cements talking about the results. Revenue, profit, EBITDA all rose but missed estimates. Now let's move on to Sun Pharma. That also came out with its third quarter results, and that was above estimates, driven by strong sales in key markets such as United States. Monal Sangvi joins in with more on this. Monal, tell us a little bit more about the results of Sun Pharma.
Thanks, Smriti. Yes, the results are a beat. Net profit came in higher at around 17%, in line with estimates. Margin was around 27.07%, which again was slightly higher than the same quarter last year, and it also beat estimates. So overall good. Like you said, yes, it was aided by a great performance across geographies. So both US and India, that make up for around 65% of Sun Pharma's revenue, recorded a double-digit growth, with India revenue up 11% and US revenue up 13%. A slight weakness on the emerging market sales, but the rest of the world made up for it, and it was up 13%. Now, the CEO in the filing did hint at a new product called Nidlegy, and they're looking forward to that approval in Europe in the coming months. So that's one thing to look out for on how it develops. All in all, quite a positive for Sun Pharma.
All right. Thank you, Monal, for that. Let's now move on to Piramal Enterprises. A weak set of numbers coming in on that. Profit converted to a loss of 2,378 crore rupees. Meanwhile, NPAs improved marginally. My colleague Vishwanath Nair caught up with Jairam Sridharan, the managing director at Piramal Finance. Listen in.
On December 19th, RBI had come out with a circular that said that any financial institution that has exposure to alternative investment funds, if you also happen to have exposure to one of the underlying clients of the AIF, then you should go ahead and make provisions. We had made a stock exchange disclosure 2 days after that, mentioning that we had a little over 3,000 crores worth of exposure in AIFs. That's what we have dealt with during the course of the quarter. We had 3,500 crores of total exposure into AIFs. Of that, about 1,700 crores was linked to some sort of assets or accounts where we had exposure. We had a lot of debate internally, but then we decided eventually to write down the entire 3,500 crores just to be very safe and fully compliant. So we've gone ahead and taken a full 3,500 crore write down on our AIF portfolio, and that on a post-tax basis has resulted in about 2,700 crores of hit. That 2,700 crores, against that we have roughly 300 crores of regular profits, which is what gets netted off, and you end up with roughly 2,400 crores of reported losses that you mentioned in your opening remarks. So that's broadly what has happened. These AIFs, the 3,400 crores worth of write-downs that we have taken, good quality assets. Cash flow has been coming in from these assets. And so the accounting action that we have taken now of taking full provisions doesn't change the economic value of these assets at all. The economic value continues to be what it was before we did the action. We have already received 1,100 crores of cash flow from these assets in the prior periods. Just in this financial year, in the last 3 quarters, we have received 700 crores of cash flow from these AIF instruments. We expect that to continue in the quarters ahead as well. And now that we have written down that entire exposure to zero, all the future cash flows that come in from those AIF instruments will accrue to us directly through P&L. And we do expect almost all of that AIF investment to be recouped over the next 2 years.
That was the management of Piramal Finance talking about an exceptional provision that they had to make this time of over 3,500 crores after RBI came out with its AIF regulations. But moving on to Dabur, that has also come out with a positive set of third quarter numbers, with revenue growing 7% and expansion of margins. Sesha joins in with a qualitative view on this. Sesha, what were the highlights of this quarter for the company?
Right, so largely the numbers were in line with the analyst estimates. Our revenue was up 7% at 3,255 crore. EBITDA was also up 9.5%. Margin at 20.5% versus 20% was exactly in line with the estimates. And net profit again is up 6.2% over the previous year. Now, the key takeaway during this quarter was that rural demand grew 200 basis points ahead of urban. This is at the time when the rural demand is lagging urban demand for the entire industry. Moderating inflation, investments in distribution footprint expansion are some of the key reasons, the key factors that helped demand from hinterland bounce back. Now coming to the volume growth, domestic volumes X of the Badshah Masala acquisition grew 4% versus a minus 3% decline. The 3% decline in the previous year. However, including Badshah, the domestic volumes grew 6%. If we look at the categories, domestic food and beverages category led the overall growth. It grew 6.7%, under which the food businesses, including Badshah, grew 22%, while the beverage segment grew 7%. Home and personal care also grew handsomely, 6.6% growth there. However, delayed winter, hurt the healthcare segment, which grew just 3% over the previous year. Dabur has also said that 90% of the portfolio has witnessed market share gains during the quarter.
All right, thank you, Sesha, for that comprehensive highlights of the results. Let's move on to Adani Wilmar, that also came out with its third quarter results. As I said, big day for results. In the third quarter for Adani Wilmar, volumes rose steadily, aided by stable rural demand and distribution expansion. But the revenue fell due to lower edible oil prices, putting profitability under pressure. Volume grew by 13% in the 9 months of fiscal 2024, with broad-based growth across segments. MD and CEO Anshu Malik told NDTV Profit that the company has turned its losses into profit and are back to normal when it comes to EBITDA and PAT. Listen in.
From the quarter point of view, one, we have turned around from the loss to profit. So we are back in our normal EBITDA and PAT. Two is that the food business continues to grow at around 18-19%, but the domestic market is growing at around 40% plus. It's the export of rice that has taken a little beating. Otherwise, the volumes would have been even more. Third is that PAT edible oil has been showing a good growth, and up to this December, 9 months, edible oil PAT is growing at around 16%, which is quite good. Market share has gone up from 19.5 to 19.8 in oil. In mustard oil, let me tell you, we have been growing at 20% CAGR for 2 years, and that is the biggest domestic oil. So their fortune remains the #1 mustard oil brand in the country. Wheat flour has been growing and market share has grown to 5.2%. So all in all the products have been growing. So Q3 has been very good.
We'll slip into a short break now, but an NDTV exclusive on the other side. Stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Let's talk about Vodafone Idea. The results were muted, but the management said that it plans to launch 5G in the next 5 to 6 months. Now, this is obviously on the back of the funding that has not yet come, but the company keeps saying that they are in conversation with the investors. The management refused to take any questions in the earnings call on the matter of funding. However, said that they'll roll out 5G. But But it also said that it'll prioritize vendor payments over capex for that matter. So any revenue or the money that the company makes will first go towards vendors. Now, the positive is for Industars here, which is one of the biggest vendors of Vodafone Idea. And as per its third quarter results, Industars overdue as on 31st stood at 5,700 crores. Now, talking about the 5G as well, Akshay Mohundra, the CEO of the company, said that they'll take 5 to 6 months to roll out 5G after they receive the funding. And by that time, he said there'll be clarity on monetization of 5G as well. Currently, as you know, Jio and Bharti Airtel, the competitors, have rolled out 5G, but they're not exactly monetizing it. That creates a stress on the 4G side of it as well, because there is no quantitative way to tell how much 5G is being used. And the Akshay Mohundra also talked about promoters' funding. Now, this Vodafone Idea said earlier, a couple of months ago, actually last year, that the promoter of the company, one of the promoters of the company, is willing to commit 2,000 crore rupees, which in comparison to the debt is nothing. If you look at the net debt of the company, that stands at 2.14 lakh crore. And the company also gave out figures for FY25 and FY26. Now, FY25, the debt payable will be around 5,400 crore, apologies. However, in FY26, when the moratorium for AGR payment lifts, the debt will be around 30,000 crore. Of that 30,000 crore, 28,000 crore will be in AGR dues. So we're yet to see how Vodafone manages all this. We're yet to hear from Vodafone Idea about their funding plans and how they plan to repay this debt in the next 2 years. So we'll keep a lookout on how Vodafone Idea fares, and if they come out with any more funding announcements, we'll keep you updated on that. But as promised earlier, let me bring you an NDTV exclusive. Northern Arc Capital plans to file for an initial public offering in the next 10 to 15 days to raise 2,000 crore rupees. This is the company's second attempt at listing, as it had filed its draft papers with SEBI in July 2021 but did not go through with the process. On the other hand, Blackstone-backed Aadhar Housing Finance aims to refile for IPO, according to sources to NDTV Profit. Saloni Kothari joins in with more on this. Saloni, what are you picking up on this?
Right, Smriti. So obviously, two financial services companies planning to hit the market in February, planning to raise combined, if you say, like 4 to 6,000 crore from for Aadhar Housing Finance Company and about 2,000 crore for Northern Arc. So that way, we'll see about like 8,000 crore worth of IPO filings by next month. Talking about Northern Arc, for that matter, it's an NBFC and they are planning to file it in the next 2 weeks. And they aim to raise about rupees 2,000 crore. Now, the number might differ because based on the OFS that they plan to come up with, the company does not have a promoter, as it's owned by multiple private equity players such as Leapfrog, IIFL, 8 Roads, among others. And the IPO is going to have a mix of fresh issue as well as OFS by these private equity investors. Now, I want to mention that this is at the time another example of many private equity players taking this IPO route to exit, at least partially, when we are seeing this market positive momentum this year and also last year that we saw. And ICICI Securities, Axis Capital and Citi are appointed as managers of the issue. Now, talking about Blackstone backed Aadhar Housing Finance Company, they are planning to raise about 4,000 to 6,000 crore with a mix of OFS and fresh issue. Now, that is also like a second attempt of the company to go for the IPO, as they had planned to come up with it in January of 2021, and they had gotten SEBI nod in May of 2022, but they did not go through it last year because they said the market conditions were not right. So now they had planned to raise about 7,000 crore that way earlier when they had filed, and now it's about 4 to 6,000 crore. So obviously a reduction in the size that they're planning to do. So lots to watch in how many companies are planning to tap the markets.
Well, yes, thank you, Saloni, for that. 2 more IPOs in the pipeline. But that's all we have lined up for you on this edition of The Reporter. But stay tuned to NDTV Profit. Lots more coming up.